What could cause a once thriving edtech giant to lose almost 98% of its valuation in a span of 2 years? The staggering downfall of Byju's, an Indian edtech behemoth, can be traced back to a series of unfortunate events. Swiss bank Julius Baer raised the initial alarm about Byju's accounting practices. This sparked a domino effect, shaking the very foundations of investor confidence in the company. The situation was further complicated by mounting financial pressures. Reports of operating losses and delays in submitting financial reports added fuel to the fire of investor anxieties. But the saga doesn't end there. The company's leadership came under scrutiny too. Calls for the removal of Byju's founder and CEO, Byju Ravindran, brought to light concerns about governance and financial management. This internal discord further tarnished the company's image and investor sentiment. These events set off a chain reaction, causing a dramatic drop in Byju's valuation and sending shockwaves throughout the edtech industry. The downfall of Byju's has had far-reaching consequences, both for the company and the edtech sector as a whole. The dramatic drop in valuation signals a significant loss of investor confidence. This loss of faith is not just a problem for Byju's, but it also echoes across the entire edtech landscape, casting a shadow of uncertainty. The once giants plummet from a $22 billion valuation to a mere $100 million has investors second-guessing their stakes. The confidence that once bolstered Byju's is now a distant memory, making it challenging for the company to secure capital for future endeavors or acquisitions. This downfall has not just affected Byju's, it has shaken the confidence of investors in the edtech sector. The fear is palpable, the question on everyone's mind: could this happen to other companies too? This might lead to a more cautious approach, potentially impacting funding and growth opportunities for other players in the sector. As for Byju's, the future seems uncertain at best. With a cloud of doubt hovering over its financial management and governance, the company has a steep hill to climb. The path to recovery involves regaining investor trust, addressing the financial and governance issues, and possibly even a change in leadership. With investor trust severely eroded, the future of Byju's hangs in the balance. What does the future hold for Byju's, and what lessons can the edtech industry learn from its downfall? As we gaze into the crystal ball, it's clear Byju's will need to undertake significant restructuring and reforms. This could mean strategic asset sales, cost-cutting measures, and a commitment to improved financial reporting practices. But more than that, it will need to regain investor trust, which has been severely damaged. This will require transparency, improved financial management, and a clear, compelling vision of a profitable future. But the challenges don't stop there. The future of the edtech sector itself is shifting. The post-pandemic boom is subsiding, and Byju's will need to innovate, adapt its offerings, and identify new avenues for growth to stay ahead in this fiercely competitive landscape. And what of the broader edtech industry? The story of Byju's serves as a stark reminder of the importance of sound financial management and transparent business practices. It underscores the need for companies to adapt swiftly to changing market dynamics and to always keep one eye on the bottom line. Whether Byju's can rise from the ashes and reclaim its place in the edtech sector, or whether it becomes a cautionary tale for others, only time will tell.